Hello and welcome to Vox Markets. I am John Human and I'm delighted to be joined by Tim Carrol and Sally McKone, respectively Chief Exec and Chief Financial Officer at Focusrite. How are you doing, guys?
Hi. Well, thanks for having us, John.
No problem at all. So we're here to talk about your results today. It's been a bit of a tricky year, a mixed year. So we've seen a tricky year on the content creation front, but the audio production side, audio reproduction side, rather, doing very well indeed. Perhaps just talk us through what sort of happened across the business.
Yeah, it's having these two divisions. I mean, they've had such a completely different journeys for really the past 3 years, and we've seen that continue on for this first half. The content creation business was just absolutely crazy off the hook during the pandemic, and we watched that as things started to get back to normality. I think the bottom line there is that there was just a lot of events that happened. There were price increases on components. There was just this hand-to-mouth thing with the channel had no inventory, and suddenly the entire industry caught up with that. Right when cost of living and economic pressures and people wanting to go out and do things outside their home. So, that kind of triage of stuff that happened really impacted the demand for the products on there. So the demand has been soft. We've been working through a lot of inventory issues with the channel in terms of overstock, not just us, but the entire industry. Overall, I mean, we're quite pleased. Well, we've actually made a lot of progress unwinding that over the first 6 months. Part of that was a really big product transition that we had with our Scarlett product, one of our main audio interface categories, one of the biggest products that we have in the whole portfolio. And we were getting ready to introduce that, but we still had a lot of the older products in stock as well. The channel knew about this. They were willing to take both on. We were coming into the holiday season. I think that was the right move for us. But, I think the net result is we were able to unwind a lot of the older products in the channel, and not only their inventory but ours as well. But it did have a bit of a bearing on the fourth gen sell-through, and I think we knew part of that. But the demand being softer, I think the end result is that we didn't see the reorders on that happen. But we have worked through a lot of that, and the good news is that as the third gen has moved out, we've seen the fourth gen products take up on there. I think more importantly is when we look at our overall registration numbers, which is how when somebody actually buys one of our products anywhere in the world. Those numbers are flat year over year from last year. And I think even more importantly, they're still up about 50% from pre-pandemic in FY19. So, we have seen, the number of people using the products continue to grow pre-pandemic on there. Also, from just a share point of view, from every data point that we have, we've either maintained or grown our share in a very trying market on there. And then when you combine that with the fact that most of the industry is talking about, this category, content creation, continuing to grow, we think we're well poised for that. So, again, a mixed bag there. It's been tough going, but, we seem to be holding our own and outperforming the market, which we're, pleased with. On the audio reproduction side, business is absolutely strong. Continues to be just still a rebound from people not being able to go experience live events. So when the market reopened again, that whole channel, the people that buy and procure the products, they needed about a year and a half to actually build up cash again. And so we're now starting to see the benefits of that, where a lot of new facilities are coming online. A lot of older facilities are retooling to add immersive or to upgrade the experience on there. So that's been a very, very strong business for us. And that's very much a pipeline business. And we're looking at that, and it continues to have a strong pipeline.
Yes. Well, this is essentially why you made the decision to expand across these two divisions. This is how the business is supposed to work, like the diversified nature of it. When one bit's strong, another is perhaps not so strong. But as you say, the audio reproduction business, everyone wants to go out this summer. Perhaps talk us through some of the sort of big events that you're doing, the kind of thing you're involved in, which sort of demonstrate the strength of your offer.
Yeah, I mean, so for example, this past year, Glastonbury was using a lot of the Martin products. A lot of the Hyde Park concerts were. It's using a lot of our technology, the sort of integration between the amplifier and the speaker, where we can actually fill an outdoor space so everybody has a similar experience. But right when you cross over that road and go into a neighborhood, our products using a lot of DSP can actually lower the sound volume dramatically so that we're not breaking any city ordinances for noise. So those type of things have done really well. But across the board, we're seeing more nightclubs, even things like gyms, gymnasiums and stuff that are adding more sound systems in there to have an experience for people to come in. Theaters are reworking, their venues to handle things like immersive audio. Which is another reason why the acquisition we did with Sheriff Technologies was so important, because so many of these facilities are trying to differentiate between what you can just get at home with a nice home theater on this. So the immersive based type of workflows are really important. So that was a big plus for us to actually get that type of technology in house.
Yeah, absolutely. And on the content creation side of things, there is a lot going on there, as you say. That people spend a lot of money on content creation during the lockdown in particular. It is higher than it was before, as you say. Are we seeing any sort of signs that market's going to return to growth? And is there a sort of regional trend to it? I mean, I was looking across at one of your industry peers, Gear 4 Music, which is obviously a channel, and they've talked about strength in the UK, but still some weakness in the rest of the world.
Yeah, so when we look at that, there's the products that we're selling into the channel and what people are buying, but the underlying demand for the product really is based on how much is being created out there. There's a lot of analysts that follow how much content is being created, both at the hobbyist and the professional level on there. And quite honestly, through all this, the numbers have continued to go up and to the right. They have varied opinions on how much it's growing, but none of them are showing a decline on this. People's thirst and desire to have new content is really strong. And when you factor in things like TikTok and YouTube and how much those are growing for independents and home studios and stuff, that's still there. I think, so when we look at that underlying demand, how much is being done, the demand is still there. And I think the fact that our registration numbers have been flat year over year and still such strong growth over pre-pandemic kind of points to that. A lot of what's just really happened is just that, our channel got into a place where, for a year and a half during the pandemic, they had no inventory. We couldn't make stuff quick enough. And so when we caught up, the entire industry caught up. It wasn't us, just us. It was guitars, drums, everything glutted into the channel at probably the worst time, because it was right when actually all the economic pressures were starting to happen and when lockdowns were over and people wanted to go out. And so I think there was just a reckoning, if you will, of having to deal with all that. And everybody has, I think, done it in different ways. Again, we're quite pleased, go out of this past holiday season. We unwound a lot of that. We still have a little ways to go, but things are absolutely moving in the right direction.
Yeah, indeed. How does this then translate into sort of the financial position of the company? So obviously net debt's a little bit higher than it was a year previously, but you've maintained a progressive dividend. Perhaps you could talk us through, as I say, how this performance is translating into the numbers themselves and the sort of strength of the balance sheet behind the company.
Yeah, sure, absolutely. So you're right, our net debt has increased quite significantly since the year end, certainly when we're almost at a net cash position. And that's a few factors. So we always have a bit of an outflow in the first half just through seasonality, because if you think of our year, we have a lot of sales, we sell into the channel ready for the Christmas and the holiday seasons. So we have a lot of creditors and a lot of debtors usually around our year end in August. And as normal, we paid the creditors going out in the first half, but we didn't get the big debtor inflows or the reduction in stock that we normally see. And that's a bit of the things Tim was talking about, having both sets of inventory, Generation 3, Generation 4 out in the channel. We had a bit too much inventory out, particularly with our US distributor, and we have an agreement with them. If they have too much inventory, they can hold back payments. So we're waiting for those payments to come through, and we really expect them to unwind in the second half. In addition, that strength in audio reproduction to support those sales, we put in a bit more stock there too. But as we now refine our processes for purchasing there and start to sell out that stock, we'd expect that to unwind too. So we're expecting a bit of a reversal, not maybe all of it, but certainly a significant chunk of it in the second half. Regarding our dividend, we have a progressive dividend policy. We've actually kept it flat on this half year at the moment. And that's, I think, recognising the cash position where we are and equally the drop in profits. But at the same time, we've not cut the dividend, we've kept it flat on the prior year.
Yeah, so I mean, a lot of moving parts to contend with, but coming out the other side of that now, tell us a bit about the outlook. I mean, what's trading like this year? What have you got planned for the business? I know that you've spent the last few years building up this fantastic portfolio, a diversified portfolio of products. What have you got planned both on the product development side, possibly, are there any targets out there, and sort of where are we looking at in terms of trading in the year ahead?
Yeah,
Lots of questions there.
No, there's a lot there, but I mean, look, I think the guidance, the updated guidance we give, is prudent and cautious. I think is the best way to put it on there. As I mentioned earlier, we're pleased with how the channel inventory from our position has unwound. We're very happy with the end user registration, and obviously the live sound business continues to be incredibly strong. The guidance that we gave is basically assuming that things don't get any worse, which I'm happy to report as of now that that seems to be holding true, and that we start to see some of these little positive rays of light turn into bigger opportunities, if you will. Along with that, there is a number of new products coming out, and I think that really shows that we are an R&D and innovative company across all of our brands. And what you'll see in the second half is a number of products coming out, some refreshes, but a lot of net new products addressing either adjacencies or other parts of the portfolio that we're quite optimistic about. They will be coming more in the later part of the second half, so they won't be hugely accretive to the year, but they are sort of factored into the guidance. And then I think overall, when we look at what the industry data is telling us about both of these markets on there, and when we look at the fact that we've done so well in audio reproduction and continue to grow and continue to get share in a very opportunistic market, but probably more importantly in the content creation market, which has been so tough for everybody, the fact that our brands are performing better than any of our competitors, and that we seem to be not only holding share in our high share categories, but actually growing that and growing the other brands as well in terms of share. That all roads to that kind of lead to that as things get better and get back into balance for this part of the business, we'll be well poised to take advantage of that.
Yeah, and do you think the fact that the ecosystem of products that you've built is helping you in terms of maintaining that share?
Oh, absolutely. It's a wide swath addressing everything from the absolute beginner to the serious hobbyist, all the way through the professional. We have a lot of people recording for the first time, and then we also have our products that are used like for the Super Bowl and the Grammys, all the backbone for all the audio, and some of the biggest studios in the world, and everything in between there.
Yeah, I'm in the market for a new pair of monitors, so I'll definitely be having a look at the Adam range. Very nice speakers they are too. Yeah. Excellent. No, thank you so much for talking to me, Tim. Thank you, Sally.
Well, that's great. Thank you very much.
Yeah, thank you.
Thank you.
Thank you.